right, so now we are in the liquidity aspect. Of course, our journey continues. Again, at this point, everything should be very basic and very clean, right? If not, then maybe rewatch it, but that stuff like actually don't really need too much other than maybe the order flow later on, because that's something you can scale in. But again, we showed a lot about structure. Again, we showed you how we use structure in terms of if we have some sort of points of interest for our scenarios, if it's an inducement or a higher time for mitigation. But everything else before that should be very, very clean. Okay, so now let's into obviously one of the most important aspects about overall trading, and that is of course liquidity. We covered it before, if you remember the fishies and everything, of course, so we will not spend too much time again in covering these different liquidity aspects, but again, just maybe a little refresher of what's going on. So essentially every market position, all the money that moves around the market is liquidity, right? Now, of course, that also includes the orders that are sitting and waiting to be liquidated. That of course means stop losses, limit orders, and stop orders. Right? Of course, not even orders that are currently running, but also orders that are waiting, even stop losses. Again, some other person stop loss might be some other stop order for another guy, right? And of course, therefore, stop losses are also seen as huge liquidity. Of course, probably the most biggest form of liquidity is stop losses by itself, and of course, its overall strategies. People and AIs, machineries, everything, we covered that before. They need reasons. Everyone needs a reason to take a trade or to place a stop. Without that reason, there's no order, there's no some person clicking the button. And of course, we covered it multiple times. Structure and smart money is one of those reasons to give to people in order to actually put the hard-earned money into the markets. Right? So how does it look like? The liquidity, of course, is the L in Liquidity Indecement Theorem. And of course, to understand an inducement, you need to understand the liquidity. Of course, we gave you a pretty good explanation with the fishes already, but be aware that this is only making 5% of what we teach as well. But this is probably the most important aspect to understand, right? Because you know the saying, if you can't see the liquidity, then you are the liquidity. And as you can see, this kid, he kind of understands it. He kind of presses the button, be like, yes, lick water, woo. They try so hard to drink it, but you see, it doesn't really work that well. So Ben, pay attention to how liquidity actually works. Because again, if you obviously understand, okay, I have to press this button, but then just because you open your mouth doesn't mean it actually works out as you want it to, right? So be also very aware of course, these basic forms of liquidity we covered, but also the structure and smart money liquidity, right? So again, think about it this way. Every time there is a buy or sell from either people or machines, they are technically matched up with the opposite orders as well, right? So when a stop loss is hit, technically the same thing is the case. So if someone's stop hits, another person gets in. So of course, always is balanced. That's why, again, the market has to be fairly delivered to give equal amounts of positions to everyone, technically, right? And of course, it's only like overall, everything is supply and demand. That's why, of course, also these supply and demand areas get tapped in all the time as well, because that's where the market is consolidating and, of course, balancing everything out and sees where positions are at the markets, right? So the basics of the liquidity inducements, or only the liquidity without inducements yet, are, of course, the easiest ones are trend, probably one of the most effective ones. Sense of pole resistance, okay, obviously everyone knows what that is. Then breakouts, also very, very effective. And then, last but not least, smart money concepts. We digged into it a lot as well, right? Again, there's multiple other forms of liquidity. There's probably countless of reasons of why people entering the trades, but those four being the most important ones you have to focus, and they're also the most important, the easiest ones to identify. That's why they're obviously also the biggest ones, because they're the easiest to identify, so people love to trade that stuff. Okay, so what does it mean? Again, just very quick. Trendline liquidity, we don't need to lose too much time about it. Again, people drawing points of the trend lines. The third touch, they're trading it, obviously wanted to continue the price forever. And then of course the same thing for the other direction. Of course, they're trading these touches of these trend lines all the time. Right, the moment they're seeing a third touch of the trend line. They love to do channels. So channels is my favorite form to do it. If they do these channels, not only trend line to one direction, but actually these channels in both sides. They're absolutely amazing to identify these liquidity zones. So get used to them. But of course, we show you exactly how to do it. All right, a few more examples. Again, trend lines getting smacked everywhere, left and right. But of course, they always show these trends, like everywhere. They're always showing these trends. But let's see. Oh my God, how amazing does this 17th touch of the trend line work? Look at the speed. Oh my God, led to a 5 million whatever risk reward ratio in this trade if you took it just like this. Of course not. It's all on hindsight stuff to make you excited and feel like, oh, look, another touch and blah, blah, blah. Again, it's all not how the market works, but it has to work at some degree. Otherwise, people would not trade it. So guess what? If they see something like this, or maybe a reversal, oh, amazing, look at the trend forming slowly. And then, of course, oh, look at it, third touch, oh my God, has to work out, right? So, of course, now people having the reason to take it. Awesome. Where's the stop losses? Of course, first of all, if you took it somewhere in here, whatever, that stop goes below this in here, obviously all the way to the second touch, right? Of course, nothing new. They're getting stopped out. And those getting stopped out also, right? So not a surprise. Building up the channel upwards, right? Of course, not a touch, depending on how you even draw this trend line. Oh, that's not even a line. You know what? You're getting my point. Depending on how you drew it, you have multiple reasons of how to get into these trades, multiple opportunities, right? So guess what? Stop loss is probably here and here, or else, right? Of course, getting stopped out, and of course, then everyone's getting stopped out at some point, right? And you already can see, as we covered earlier, maybe this is again this fake change of character things where they love to fake these areas, again giving smart money people, smart money traders, the reasons to get into those trades, taking out the high one more time, liquidate them as well, and of course then the plays are technically done, and you already can see of how then technically they do it. Then it's just the real type of break of structure, probably something to your left also, and then our area is getting mitigated in here, and of course then where they're taking out all the liquidity that built up before, right? Of course, that's technically of how you do it. Another one, very easy one. Again, look at this trend and forming, third touch, fourth touch, millionth touch, whatever. There's the stop losses, very obvious. They're all getting obviously smoked, right? Okay. Then, of course, we have the breakout liquidity. Easy stuff. They're looking for these areas of resistance or support. At the moment, obviously, that's getting smoked. And of course, even these highs, if it makes new highs, they jumping in left and right. So that's why obviously even these wicks, they are very nice and choose liquidity spots, because again, normal people, they think, okay, these wick entries, whatever, they cannot take it out anymore. And if they do, they're jumping in left and right in these positions, right? So again, look for these channels sideways also. Breakout traders love that. And also these zones in here, right? If they see this significant pullback zones, they love to just put their buy stops above that and then grab the breakout technically. Or this again, ranging, breakout trades buys in here and sells in here. Obviously first induces to the other direction and then smokes to the downside, and slowly but surely get your eye trained of what they do, right? Again, building up the short trend, and of course when they stop out these people slowly but surely who got into the short trend, right? And again, same thing for the long side, inducing low first, one more time higher, just again to take out these channel traders in here, right? And of course then continues lower, right? All the time the same thing. So identifying liquidity will be one of the most important things we have to do, right? But of course we show you very later of how to do it properly. Again, look out for these zones where they're kind of ranging. What are they trying to do? Building up liquidity, taking it out, going the other direction, building up liquidity, taking out at this time, and then of course taking then the reversal, so on and so forth, right? Always the same stuff. Again, breakout traders in combination with liquidity in terms of trend line, right? So breakout traders always seeing the consolidation, getting induced first to a fake breakout to the downside, then they're getting a right one, they're getting all excited. Trend traders jump in, left and right, always the buy. Look at this 15th touch of the trend line. And then, of course, just to take them out later, right? And of course, endless opportunity, examples, support resistance. We don't need to dig into that too much. But of course, if these zones getting broken, they're getting retested from time to time. That's also where people jumping in. So always be aware of these zones. Also, if they're again giving quadruple tops, then comes back, taps in one more time. Oh my God, so valid, right? Of course not. But of course, be aware that these are easy spots where you can target or identify liquidity. Okay. Then of course here, look at it again, 50 million touches to the downside, breaks it, retest, and wants to continue lower. Of course not. Right, again, before they even do that, again, they're stopping out these people, even the structure points in here, faking again the structure reversal thing, whatever. Again, they have given you the excuse that it's just a pullback, whatever. Like, that's not what it is, though. Again, it's just to liquidate all these orders and then obviously smoke to the downside, continuing lower. Right, again, just examples of what support and resistance. You know the stuff by now, very easy stuff. And again, noticed trend line forming, channel forming. What's going on? Getting induced high first, induced low, and then obviously can continue higher. But before they do it, they're building up this order, stopping them out later, faking the reversal traders, or faking the reversal in terms of these choks, whatever, reacting from some sort of scenarios in here just to take it out later. Right? It's all traps being left and right, all landmines you have to be aware of. Then, of course, these break and retest stuff, right? And they, of course, they're faking the pullback scenarios or they're faking the reversals, right? Of course, people jumping in, like break, right? Break, retest, break, retest, break, retest, right? And of course, all stop losses in these areas, of course, they're all getting smoked and tubed, okay? Again, same thing for the downside, just be always aware of this building, these channels, and downwards action, where the stop losses everywhere technically. So guess what's going to happen? Of course, grabbing all the stop losses, and then we actually can even pull back, right? Of course, perfect. Same thing here, triple top, look at it, how sustainable it looks like. Oh my God, and even this crazy triple bottom, right? Yeah, definitely makes a lot of sense. Or triple bottom didn't help too much, too good, right? But what was the original idea is, of course, we dig into this concept already. We're filling the imbalances. Before that, they always building up this liquidity. Again, their initial task is to fill these imbalances, fairly deliver the market. But of course, they don't randomly just do it. They want to hit two birds with one stone. So first, they're faking the liquidity. So people jumping in buy, right? And of course, then to take them out, right? The stop loss is obviously below these areas. And then, of course, building the false channel downwards once again, just because they wanted to obviously get mitigation done. Overall, filling the markets, fairly deliver it, and then obviously stopping out everyone who buys or sold, in the first place. Of course, boom, faking the quadruple top once again. So sellers getting excited. So guess what's going to happen? Taking them out, right? Okay, so you see how they're always faking these reactions left and right, but again, time and time again, it's always the same stuff. Same stuff as we digged in earlier with smart money concepts, right? So again, just to cover it one more time, and again, we stop making fun out of it then, but think about it this way. When all these retail concepts or smart money concepts never would work, never. Like again, a trend line always failed on the third touch, always. Smart money concepts, they always fail in these mitigation areas all the time. Then who literally would trade it? Again, that's the reason, again, we digged into it earlier. It has to work from time to time to keep people and these strategies alive. Again, if it just fails all the time, immediately, no one would ever trade it. So of course, that is why sometimes a triple top or like a Wyckoff or like a mitigation or whatever, of course, it can lead to a huge trade. Same thing as a random Fibonacci retracement out of a sudden leads to a huge trade. Yes, because they have to show it to you. They have to show it and prove you that from time to time it works. Otherwise, nobody would trade it, right? So I guess don't get surprised if a triple top, again, gives a huge reaction, but it will get taken out at some point. But of course, it has to show it for all these triple top traders or these head and shoulder traders or whatsoever, because if it never would work, there would be no liquidity buildups. It wouldn't work, but the market has to be liquidated. That's why they have to make these random concepts like retail concepts and smart money concepts work from time to time. Well, that's not how it works, right? So always be aware. Again, using the smart money concept approaches with these imbalances, the POIs, of course, yes, we can combine it very well also later on, but overall, that's not what's going to work, right? Again, these points of interest after these break of structures, they're getting smoked left and right also, right? But again, smart money traders will not tell you that. Of course, that's why we have to tell you, okay? Again, same thing, break of structure to high side, whatever, takes it out. So whatever, that's in continuation maybe, or now, chocks to the downside, whatever, like it just isn't the case, right? Again, if they want to take continuations, again, they're getting stopped out. If they're looking for the reversals, there you go, right? But again, this is not what they think it is an inducement. It's an inducement high. And of course, now this makes sense in terms of a mitigation. What is this? Liquidity buildup, right? But what is this? This is a smart money trap. Again, they're trading the order flow, getting smoked, right? Again, building up liquidity first, faking, again, the Koch. Right? Again, they want to take it lower. So this becomes, again, a smart money trap in here. The only reason is taking out liquidity, trading away from the inducement, and of course, continue lower, right? And then process building all these traps in between. Okay, so again, we show you exactly how to use it. Another example, again, where they show, again, Kochs in this sense, not even break of structures, but Kochs maybe, right? If this, whatever, links to the high, making a Koch. So whatever, they think, oh yeah, comes back to the extreme, maybe this one, maybe this one, maybe this one. The reality is they're all getting taken out, right? Okay, so anyways, then again, there's endless opportunities. We will not waste too much time with it again, because we will show you multiple examples of how to use it, and we don't want to confuse you with what not to do. But just be aware, again, these smart money concepts are also highly attacked by, obviously, the enigma. Okay, so liquidity is the most important aspect about it all. Again, without liquidity, nothing works. But the good thing is, the moment you identify it, then it becomes very, very clean. You just have to get rid of this other noise, again, smart money concepts, structure, some other forms of retail concept methodologies, and we will show you how to do it later. So last but not least, once again, and then I promise we're done, smart money is not the way you do it. Again, seems very legit, but it's also, of course, has multiple layers to it, and the deeper you cut, the more, unfortunately, or the more layers you peel off of the onion, the more, obviously, the reality hurts. And yes, it's not good if you dig into it a lot of times and spend a lot of time learning all these concepts and hearing this from us that this is not the way to go for. You probably have a lot of false belief systems and you want to keep hold on it. And it's very hard, obviously, to just let go and accept that this is probably not what's going on, right? But again, we also not only based it on our personal experiences and our year-long journeys, and obviously our students, how they trade, and we definitely not train smart money. We also coded it, right? And we obviously confirmed that even if you just look at all these imbalance zones of these supply-demand areas and stuff like that, if you just look at all of them, hard-coded, again, not us finding zones, but actually rule-based codings finding these zones, around 80% of these points of interest fail. So again, that's why we will not focus on these points of interest. Again, first of all, we had to explain it to you before, right? You're probably thinking like, why the hell did you explain it in the first place then if it doesn't work? Because they can work from time to time, and we will combine it later on if the rest is done. Again, it's not saying like we will never use a mitigation ever again. It's the opposite. We will use mitigations, but only in places where it's highly confirmed and where it makes sense. On all the other stuff, which nobody will ever tell you, the daily cycles, the cycle variations, the lit cycles, and of course, all the other confirmations we have then. And only then we can pick these points of interest at some point and then make use of it. Okay, so everything step after step, just be aware that overall, just because a point having an imbalance or is a point of interest or some sort of whatever has a break of structure behind it or a choch, that is not of how it works. Again, hard-coded, we coded this stuff like quite a while ago and realized very early that this is not the way to go for, okay? But we obviously show you how to do it. Again, just some more examples of where it's just getting crushed, but I think you get the point about it by now. So that's why we move away from that. We move away from the smart money approaches and obviously dig into it. One last time, smart money is not bad at all. It's a good start. If you start out there, don't get demotivated. It's exactly, again, of course, you have a long journey in front of you, right? So just remember, everyone was there, right? So we were there. Of course, if you have went there, maybe you rode the bicycle like this guy, like, yeah, that feels good. I get like good trades out of it. That makes sense. But yeah, we have to still change the tire and make it properly work, right? So we will combine obviously everything we showed you earlier and of course making a lot of sense. And again, be aware that everything we showed you by now is a very, very slight percentage of what we will do later on. So let's dig into the hammer a little bit.